Okay, well, I'm here with Hima Reddy at a conference. Hima, are you ready? Get it?
I'm always ready.
That's your last name.
Yes.
Hima, we wanted to talk a little bit about looking at the market top down as opposed to just sort of, let's define what that is. What is top down versus bottom up? For a lot of people, I think that's kind of a new concept, actually.
For sure. So when it comes to stocks especially, I would say that it's a matter of looking at the broader market, then whittling down to the sectors, then whittling down to the industry groups if you'd like, but at least sector before looking at the stock,
Right,
you know,
exactly.
making sure that you're going to trade a fish that's going with the tide, not the guy who's going against
Right,
it.
right.
So that's why I would
And it really comes down to correlation in the market, right? And if you think about, like, particularly in the equities world, so the equity market is somewhere around 60 to 80% correlated, meaning if the stock market as a whole goes up on any given day, let's say by 1%, most stocks, again, between 60 and 80 probably go up.
Yep.
That's very different to other asset classes, like, let's say, currencies. If the Aussie dollar, New Zealand dollar goes up, that means just about nothing for, say, euro, Swiss franc, something like that, right? So that's very different. There's not much correlation there, but in equities, that correlation is very big. And so I always find it very interesting. You know, you can do the bottom-up analysis, but I think for a lot of people, whether they're at home or even for a lot of institutional investors, you know, a lot of institutional investors, like, let's say a family office, they might have a research team of 2 people. It's very difficult to go very deep on analysis in a single name stock if you just have a small team. So, right, so then kind of going with the tide, it makes a lot more sense, meaning you start off looking at the market through the lens of what's moving on a sector level is, say, the financial sector, bullish or bearish, and then you pick your stock, right? So let's say financials are bullish. Okay, well then maybe let's see if I can find a stock within that, maybe Bank of America, JP Morgan, whatever, that may also be bullish.
Yep, that's
right?
exactly something I do every Tuesday after the close, and I've just started this recently. I go through all of the GICS sectors, so the 11 S&P sectors, and then I'm just using technical analysis. That's one thing we do have strongly in common is we love the charts, but most of my traders are day traders, and I think most of yours are swing traders, right?
Yeah,
So
yeah, we have both, but right.
The big battle.
But it really goes along the same lines, right? I mean, if you see, like in your case, you could see for example, have good earnings, say, out of technology stocks.
Yeah.
And then of course that'll lift most stocks in that sector probably.
Yep.
And then you just play that, right? For
Right.
intraday, and whereas I'll just play it for multiple days. I mean,
Exactly.
it's the same analogy.
Right. You can take advantage of short-term moves if you're prepared to accept short-term profits and get
right.
out of the way. Instead of holding on because you want that day trade to turn into a swing trade. That's probably where people get really mixed up and, you know, hurt their accounts. So.
Well, we all have a lot. Actually, we have a lot of stuff in common. One of the things is your background is also more institutional, right? So I started off on the institutional side, both the buy side and the sell side. And tell us a little bit about yours, because that's actually, I think, where then the top-down approach is probably what shaped us looking at that, because that's what professionals actually do.
Oh yeah.
And I'm going to be careful not to talk down to people who do bottom up from a trading perspective, but it's very difficult, right? Again, you look at a single name stock, whatever, it could be a stock with XYZ, you look at it from a technical perspective, whatever, and you think it's going to break out. Well, okay, good, but what if that entire sector is being dumped on? You have a very small chance, like we said, between 20 and maybe 30% chance of making money.
Yep.
That's not really trading, that's more gambling, right?
Well, and I would actually agree there that day trading stocks can be a lot more challenging, but I'm day trading and instructing my traders to day trade futures on stocks.
Okay.
So futures on the equity indexes. So if you're doing the ES or the NQ or the YM, mini Dow, mini NASDAQ, mini ES, you're trading a futures contract and day trading in and out, but with the big broad index.
Yep.
So you're just kind of taking moves based on that.
Right.
So it kind of marries our.
No,
our
I mean,
differences
we're
a
saying the
little
same
bit.
thing. But
Right.
so in terms of your background, I know
Right.
she was actually, I didn't know she was working somewhere. I was using the research of the company we was working at, but I'll let you.
Yeah,
and I didn't
so
even know she was doing the research. I only saw the
right.
front man give me the
We
reports.
met after the fact. So I was the behind-the-scenes gal, if you will, at Piper Jaffray most recently for a couple of years, working with Craig Johnson, who's a CMT. So we both trained the technical route. But it's funny because fundamental analysts would call me a generalist because I'm able to look at any chart of anything and give an opinion, right? And so I covered healthcare, I covered financials, I covered everything in between. And yes, we would write these big research books. That's probably what you got, the big technical outlook every month.
did, yeah.
And those would go out to portfolio managers and trading desks and folks all over the world. And that was a really good learning experience, and I enjoyed that. It's just that long term, I knew I wanted to teach my own methods. I wanted to be able to communicate and impart things on my own. Prior to that, I was FX and fixed income. I don't know if you know that. So I wasn't always just equities.
Right.
And again, in a very fit in the box kind of way with analysis. You have to be very specific on what indicators you use and how you use support and resistance. Nothing bad, nothing good, just very different than what I'm able to share now, which is a little bit off the book. I joke often that there are things I do now and teach that if I did that on the CMT exam, I would have failed.
but then that's actually interesting, because if you look at the things that are being taught, whether that's in the CMT exam or you go to school for it,
right.
At the end of the day, that's just theory. That's nice to know. In reality, and that's what I make a big deal about to my clients, whether that's from the educational side or it's a more direct relationship on the advisory front. I make sure they understand that the textbook stuff usually doesn't work, which is why it takes experience and actual experience in the market. I think is so important to be able to make money. Yeah,
I actually tell my students that it's like learning the piano or any other instrument. First, you have to learn to play by the rules, and then it's a little bit of like playing by the heart. Now, I'm not saying trade with your heart. That can get you in trouble. But I am saying that the rules you learn are there for a reason, and then you start to see things that are not written in the page that you can extrapolate on and build. And Serge has built many proprietary systems and indicators. The first time I met him, or second time I met him, he had this T-shirt, which was just awesome. Was it the B2B?
B2B.
See, I don't even know what the indicator does. I just remember that T-shirt, and I was like, that is a great way to get people's attention to this thing. So.
But it's interesting because I think this is kind of goes back to the other point. I think, and I see this a lot in this industry. Unfortunately, there's a lot of people building tools that really have no real merit. But if you've actually managed money and you've looked at this and you've seen this through the lens of a professional trading desk, you have, I think, a better feel for what actually works. So this is a bit of a word of caution, and it's not a sales pitch for him and I. It's more just I think it's important to kind of check, to make sure that whatever guru you're following, and you probably have too many gurus to begin with. Make sure there's at least some experience there that you can follow.
Yeah, for sure. And another point to add to that is if you are able to learn from somebody, that is almost as valuable as what track record they have, what experience they have. Because they may be very well versed in what they do, but if they're not able to teach to in a way you can absorb, I would just say to keep that in check too as you meet gurus and find new trading opportunities in your education.
So I would say, as sort of one main sort of takeaway here, or lesson for those of you guys that are watching this, looking at the market through the lens of what, it's the dog that wags the tail, not the other way around. And if you're looking at a single name stock, let's say, whatever, I don't want to say a name, it doesn't matter, just like take your favorite stock, and you look at that and you don't look at what its industry group is doing, whether it's bullish, bearish, and in which time frame, right, short term, medium term, long term, you are, like we said before, you have maybe a 20 to 30% chance of making money. Whereas if you totally disregarded what that stock looked like, charting wise or whatever, and you only looked at the industry, you could almost blindly buy that stock and still have really good odds, like 67%, 60 to 80% of actually making money.
Yeah, for sure.
And you would agree with that.
I agree with that. And then I also think by getting yourself trained to look at the sector, the industry group, the stocks, and do that regularly, you're going to start to see shifts in the market ahead of other people.
That's right.
They're going to be staring at, whatever stock it is, especially big names, and saying, well, it hasn't bottomed yet, so I'm not going to stop selling. But you might see the shift in the other stocks in that sector. And so it actually ends up being a little bit of like a leading indicator, which you can use on top of, momentum or anything else that's leading. And it's all about trying to figure things out that are right ahead of the crowd so that you can take action, right?
And it's just about putting the odds in your favor. I think too often people don't think about this as a serious business, but all it is about money, and that's important, right? It's not a game, it's not entertainment, it actually is very serious. So you need to do everything you can to put the odds in your favor, and if you do this top-down approach that Hima and I both use, and I actually programmed this into a piece of software called the Market Rover, where it literally tells you which sector is bullish, bearish, neutral, in which time frame, and when that change happens. Because at the margin, I mean, usually when the market makes a move that's semi-decent, anywhere from 3 to 5 or 10%, they all start turning bearish and then bullish, and it's a thing of beauty, right?
Yeah,
so it comes in waves.
Well, that's the thing, is they tend to move in groups, and the outliers are not things that you want to make a regular habit of trading because they're going to keep tricking you.
That's right.
So when you find something that's not behaving like the rest of the crowd, then just maybe like let it trend longer, only trade it on big breakouts from patterns. Don't trade all the little squiggles, you know. So.
And there will be idiosyncratic stories, right? So you could look at whatever, let's say like transportation stocks. There could be a story where, let's say, the entire sector is being bought, but one company had accounting irregularities, and then of course that was out the window. But again, we're trying to play the odds, and I think this is just a better way.
Right, for sure.
Thank you, Hima.
Thank you, Serge.